Today's episode will spark an authentic, off-the-cuff, candid conversation with one of the most thought-provoking women in SBA. So today, my guest is Stephanie Dunn. She is the Chief Revenue Officer over at Phoenix Lender Solutions. So let's jump right in, and I'm really excited for this episode. Welcome, Stephanie Dunn, to my podcast. Thank you for taking the time for doing this. You know, it's been a while. You're my first guest, and I was so happy that you did this with me, and now we're into it, and I love having you on. I love working with you. I love you as my friend. Thank you for doing this with me.
Yes, thanks for having me. I love you too, and I love your show. You've been doing great.
Yeah, I've been posting a lot about my daughter Ella, so I'm sure she's not loving it, appreciating it, but whatever.
Well, is she one of your fans? Maybe not. Don't worry, my kids don't watch anything I do.
She doesn't either. You know what I mean?
Yeah.
But it's fine. So I was researching last night and I found, this article that I'm going to read from. So basically it states as SBA lenders, we've seen over the headlines over 100 million SBA loans issued for fiscal year 2024, which totaled 56 billion, the highest volume since 2008. That's a 22% increase from 2023, which totaled 52.4 billion, and a 50% jump since 2020. So that came from the SBA's 2024 Capital Impact Report. So it's a major milestone, right? And so at the same time, we're also facing a shift in the policy from Trump removing the DEI. From your perspective as a woman, how do you see the two dynamics playing out? Are we entering a period of, more opportunity, or are these changes unintentionally rolling us back? What do you think?
Well, to be clear,
Yeah.
my opinion is equitable access and equal standards are not mutually exclusive.
Okay.
We can and should do both. That's not just good policy, it's good business. So the recent changes to the SBA guidance and the removal of DEI language, which I understand raises concerns, but I see this as an opportunity.
How
because
so?
I'm always a glass half full.
I know.
Banks like mine we don't need federal directives to serve diverse communities. And all that upward momentum you just shared in the last 5 years post-COVID had nothing to do with government mandates. It had to do with entrepreneurship in America.
Okay.
And so I think we don't need federal mandates, we need momentum. And that's what we have now. We need to continue our momentum. And so we need better data, we need outreach, we need partnerships. Those are all the avenues that help us build access to capital and find the borrowers where they are. We need community outreach. We don't need government mandate to do that.
That I never really thought about it like that. So how do we get to that? How do we build that momentum from, everybody is talking about, oh, these changes, oh, are we going backwards? Oh, how do we reach that? How do we reach out to that?
Yeah, federal mandates has nothing to do with entrepreneurship, small business ownership, capitalism, and the American spirit. Federal mandates were never intended to meddle in the entrepreneurial spirit. It's to keep America safe, and that's what we need the federal mandates for, right?
Right.
So what we need to do is we need to focus on the fundamentals, actually, and let's not be distracted by what the government's doing to help us get out of this terrible global stance that we're in, and our, not to mention our big impact on what's that word I'm looking for? Oh, that's it. Our deficit. Our deficit is the federal mandate. That's what their job is. Get us out of this deficit that we're in, because we're at an all-time deficit, okay? We need to be able to refund America so that we have money in the coffers for Social Security and all the government programs that are important to this country. Security, safety, our aging population. So when it comes to entrepreneurship and small business, what we need to do is we need to focus on the fundamentals, which is removing the friction of the process and allowing more access to capital by working on that process.
So I agree with you, but lately there's been focus on, well, one, the changes, two, default, and in addition to that, fraud. So we're not really seeing championing SBA. We're seeing a transition with the administration of how they're uncovering facts, figures every day, especially with the fraud. So
Yeah, thank God for that, right? I
thank
don't
God
want
for
fraud to
that.
continue.
I don't want that to continue either, but at the same time, I don't see anywhere where they are promoting how well our program is doing. So, how do you go from media negativity to, you want to say outreach, but how do you get there? How would you do it?
Well, podcasts like yours, that data that you just shared and the metrics that you just shared, that's positive data. And you're right, that should be on the news. Actually, you're right.
It should
And
be.
so the government eliminating DEI in the agency, it should never have been there in the first place. It's irrelevant to capitalism. If you're eligible for a loan, you get approved and you get that loan. This is America. That's how the banking system works. There is no discrimination when you submit paperwork because you're submitting paperwork. We have come a long way in the last 100 years in America, and there is no discrimination when it comes to financial viability and underwriting the 5 C's of credit. We are underwriting repayment ability, the vision of the business, your projections going forward, your historicals up to that point. We're underwriting your experience as a business operator. There is never discrimination. I promise you that, because I've been doing this for 25 years. I have never seen discrimination in numbers.
I believe that. But they're what I'm seeing or what I'm hearing kind of promoting is in the press that DEI will affect underserved communities and how women are approaching how women are, it'll be harder for us.
You're
What
watching the
you're
wrong
saying.
channel. Dana, you're watching the wrong channel. You need to turn off that fake news.
It is fake news, but for some reason they're putting it out there.
Tell me how. What are the examples of how it's going to be harder for a woman to get a loan?
So in 2024, the average loan size for a woman, and I don't want to misquote, was smaller than what a male entrepreneur was approved. And so at the end of this podcast, I can get those statistics. So that was one. And
But why?
I'm
How?
asking you.
Yeah, there is no determining factor in that data. If there was a direct metrics correlation that you could share, that data would be relevant. But what that is politicians spinning numbers.
Okay.
Okay, so less women applied for loans. Or women needed less money. You know why? Because maybe women are more responsible and we don't need to borrow as much. Maybe women are more conservative when it comes to borrowing money because that's how women are. And we only borrow what we need.
Okay, so then in your trend, 25 years, has that been the story? Versus male entrepreneurship. What have you seen?
That is the difference. I don't delineate between a male or a female or race or ethnicity or religion. As a banker, we look at the numbers, we deal with facts, we look at repayment ability and being responsible with a government-backed loan.
Fair. Damn.
Yeah. And so I would say this too, if you look at the data over the last 5 years, let's just look at the trends in America. The trends since COVID have been across the board. Loan amounts are smaller for all men, women, ethnicities, race, religion, geography. You know why loan amounts are smaller? Because since COVID, it's a combination of, well, businesses don't qualify for as much because financials have compressed post-COVID. Personal credit scores in America are across the board down because more Americans are leveraged post-COVID. And there's a shift in our life patterns, and we're borrowing more, taking more trips, enjoying life more. That has just been the post-COVID phenomenon, right?
100%, yeah.
And so we have a total economic system now that's qualified for less debt, which thank God for that. Because wasn't that the problem in the last economic recession? People borrowed more than they should have.
Well,
Well,
that
maybe this adjustment is a welcome to being to prudent borrowing. We talk about prudent lending all the time. Maybe this is a realignment to prudent borrowing. And I think women are the ultimate responsible purse carrying.
how so? Please explain more so of what how you see this trend happening. I love that.
As a woman, I believe women are responsible when borrowing money. I think women are more conservative. Like I said, only borrow what they absolutely need, want to pay it back as quickly as possible. That is just in a woman's DNA. And so the fact that women borrow less, I think is just a reflection of the women's mentality.
I have to say, can I agree with you without it being controversial? But let's just
Hey,
go with that. Hey,
I mean, think about it. I know a lot more men that are way over leveraged than I do women. Women, we're good not driving the car of the year. I'm good without a yacht. I'm fine without a jet. I don't need, expensive things. They're luxuries and they're few and far between. When I look at personal credit reports, I think women have less luxury items. Believe it or not, we are painted as the class of people that just loves to spend money. Well, I don't believe that's true when you look at personal credit of a woman and the demographics of the female borrower.
I I would say, in being neutral, I do agree, but at the same time, commenting on your we just get what we need. So I'm thinking of that fact. So it was in I was reading. I did a podcast, and part of it was the fraud, right? And it was top singers that they were spending money on yachts. And I have to say, I mean, look, the number was of people is out there, but all like it was like 10 artists that were men. It was funny. It was like 10 pop singers and celebrities that are being investigated now because of the fraud. But I agree with you on that. I think that going back to one, prudent lending, two, women basically getting what they need.
Yeah, yeah. And you know what would be really interesting facts, and this is why I'm so data driven. It would be really interesting to collect facts on female entrepreneurs and the speed of acceleration of their businesses, how fast their business grows, how much they borrow during that growth phase. In my experience, what I've seen is women who are entrepreneurs and start businesses start responsibly, use their own funds usually to begin with, or family and friend rounds. They go that route first. They grow responsibly for a year or two, and it's a responsible acceleration over a 5-year period, let's say. They don't start a business and go out and borrow $10 million to start a startup.
I bet you we can get those. I don't know. Do you know Bethany McLean?
Yeah, I do. I was just talking with her this morning.
She would probably like, again, like off the cuff, we could do a podcast about
That'd be good.
because
So
she
that's what I want to dig into. I'm telling you right now, the demographics of minorities and women and access to capital has absolutely nothing to do with government mandates. We are big girls. I don't need the government to tell America to lend me money. Like I don't we know how to do it now. Thank you, everyone. So women know how to start businesses, run enterprises, and borrow money. We are in the year 2025. I want the government focused on government stuff.
And then you just want the SBA, like you want to just focus on growing, doing the prudent lending, and
Yeah, I think banks are responsible and let the banks lend money to the small business owners in all areas of America and in all markets of America. Like I said, back to the fundamentals of enhancing the process, making the process more feasible, and enhancing technological tools, enhancing partnerships to find all these small businesses in all these markets across the country, right? Urban and rural, and every demographic, and race, religion, woman, men. Like we need access. In order to get access, we need partnership, we need process, technology, and tools. We don't, government is not part of one of those.
well, so much for that question. Okay.
So what were you thinking? Were you thinking the government is going to give us permission to borrow money? What?
I was thinking that because of all the changes, it's allowing banks to take more responsibility on determining their own, like being more independent, whereas before they were more restrictive on what they had.
No. Banks have always had to be responsible. That is the job of the bank. Regardless of the program, the buck has always stopped with the banker and the bank. It is the bank's responsibility. They have a fiduciary responsibility to make sure we are lending prudently, whether or not it's backed by the American taxpayer. That is our moral and ethical and professional responsibility.
I agree. My perspective was, yeah, that actually was it. With the removal of this language and the different changes, you know, two men were on my podcast.
You should have had me on that one.
God, no, no, no. And so their perspectives and what they were saying was like, yeah, they're saying with all the changes, the banks will have more of a decision making process of who they lend to. That's where it's coming from.
Did they not learn in banking school that that was their job in the first place? In my opinion, since COVID, and of course, banking, I think, still has catching up to do when it comes to technological advancements.
Mm-hmm.
And I think we've made big strides over the last 5 years from a fintech or technological tool perspective, right? Access to capital is access through your device now, right? Which is fantastic. I'm a big advocate of fintech and tech tools in banking. And I have been in fintech for years and years and years for multiple banks. And the interesting data is that big increase in volume that you mentioned, the majority of that increase in volume is loans under 500, and that has been driven by those fintechs. Those fintechs built these score and go models. And it's the score and go model that did not maybe do all of the proper necessary underwriting.
And right.
Yeah, that we were just talking about. That is the bank's job, right? The bank's job and responsibility is to make sure there's repayment ability, it's a viable business, the business is eligible, the borrower knows how to run the business, there's a future for this business, and we're helping this business grow. That is our job and responsibility. Well, these score and goes that don't establish relationships and it's all online and it's just this data-driven algorithm. Well, that's what the changes to the SBA program now are trying to implement, is more guardrails for the score and go. Because guess what the data has shown us? Those score and go models have the largest defaults.
Yeah, I mean, what was that? Oh, God, again, and I did that. Who did I do it with? I did it, and it was one SBA borrowed or lent money to one borrower that was 12. So there's a stat out there.
Yeah, exactly. And that's those score and go models don't have those guardrails And there's so much fraud and abuse, and that fraud is a lot easier through a device than it is talking to a live person, right?
It is, yes. And so what the trend has been, what I posted something on LinkedIn with all this technology. I've seen downsizing in that 500 and under space because the software banks feel like the software banks and non-banks that people aren't needed. So, for example, Fifth Third just laid off the whole closing team. And so part of their responsibilities are from a software system that they felt like it could be overrun and they don't need the closers anymore. That's one. Number two, they laid off 20% of their workforce, most of the 500 under space, again, replacing people.
Yeah, that's the fintech model. And that's what these changes to the SBA policy are trying to prevent the removal of the correct underwriting, whether it's a human or technology. You know, look, there's a whole conversation around AI too. And will AI replace everyone? Well, in my opinion, AI will not replace humans. It certainly is a tool, but we definitely need to pivot. Human beings need to pivot on the way we've always done business to the way we need to be doing business now going forward, and how to be efficient, how to still engage prudent lending and do the proper underwriting using technology, and how we now can apply our human skills.
So,
Where?
okay, so with AI and, working with people, how would that partnership, what does that look like to you? How would you execute that into, your bank? Like a plan.
Well, every bank in America is implementing some form of AI.
You think so?
Yeah, we have been for years. What do you think? The scoring models were all built on
Yeah.
algorithms, and so a form of information gathering. And so now it's the growth in AI space has been so rapid over the last 12 months. It's
Oh
really
yeah.
faster than I ever thought it would be. But it's amazing. I love it. I use AI every day in just information gathering and the speed at which I can now analyze data and gather information through AI versus having to do it manually. So it has increased productivity and it's increased efficiency. And so is it replacing humans? Well, I mean, the human that was once doing that manual work can now perform at a higher level. And so really, when you think about human beings and what our highest and best use is a human being with a college degree in finance, their highest and best use just data gathering? I would say no. I would say the highest and best use of a high performing, intelligent employee should be decision making. I want you to be problem solving. I want you to be focused on how we're going to take this business to the next level and growth solutions. So I think the AI tools are phenomenal, and they're helping us now be able to be more efficient and more productive and allow our humans to perform at a higher level.
I love the fact that you mentioned we need more experienced professionals. And I also understand that we also need like an influx of newbies. But for this purpose, for example, the closers from Fifth Third, I placed with, Michael, who, is part of a fintech. And so she's experienced and she could bring that to the next level of what he needs because of him. And that's another thing. We'll talk about leadership because I feel like, one, with the talent out there, with all the trending of downsizing, it affords fantastic and talented SBA professionals. Unfortunately, they were being replaced by something. but these talented individuals would not ordinarily have been available. And so their next partnership includes a difference in leadership. And so helping that grow, I feel like with this closer, she's a closer, she affords the opportunity to do that. But it's unfortunate that I've seen the trend of downsizing as well. But I've seen, in addition to the downsizing, a lot of banks, just keeping their in footprint people. There's free clients out there that just got rid of a whole bunch of videos and everything, and they're just keeping their imprint and footprint. What do you think
Mhm.
about that?
Yeah, we're at an interesting crossroad in this business, isn't it? It's been interesting to
I
watch.
just don't. Well, why are they doing that though? I don't understand.
I have to tell you, I'm in the thick of it, and I understand exactly what you're talking about, and I think about it 24/7. It literally keeps me up at night. And I see opportunity. I see an industry that has been doing it one way for as long as I've been in it, for 25 years. We had been doing it the same way since the 90s, early 90s. And so when I think about where we are today, I'm excited about these changes that you're talking about and the shifts that are going on in the industry and these major strategic paradigm shifts that these banks are doing. I'm excited about it because it's a realization that we couldn't go on doing it the way we did it in the 90s. The world is a different place. America is a different place. And especially like we just talked about in the last 5 years in America, post-COVID, this economy needs something different.